All right, how's everybody doing today? Cryptos are starting to bounce up, recover a little bit. Certainly a good sign. How's everybody? And before we get in the live stream, make sure you all smash up the likes. Subscribe with notifications on. We're going to be taking a look at technical analysis. We're going to be seeing where cryptos are headed, what they're doing. Appreciate you all showing up to the live stream. It's great to have you all here. See if I can fix something real quick. I'm going to the wrong screen here. All right. So today we are seeing cryptos bounce up a good bit. It's very good to see after a lot of red. This is our second green day in a row for the stock market, for cryptos. It is certainly looking very good. We're going to be taking a look at technical analysis. We're going to be taking a look at cryptos. We're going to take a look at Terra. Should you be buying Terra at this moment? A lot of people are asking that. We're going to be taking an overall dive into the crypto market. We're going to watch it live. Here in about 29 minutes, we have Jerome Powell. He is going to be speaking, and he is going to be talking about inflation. So depending on what he says, could certainly pump or dump the markets in a very, very big way. So we're going to be cautious. We're going to be watching that, and we might be able to put it on here on a live stream. He's going to be speaking on the Wall Street Journal or something like that. Okay. So the first thing is first, we're going to take a look at Bitcoin. We're going to take a look at crypto fear and greed. We're going to take a look at all the overall markets, see what's going on. So as of right now, it does appear that the crypto market has bottomed out. Now this can change any second. This can change any second, so we certainly have to be careful. You know, this may or may not have been the bottom. So for Bitcoin, it's about 26,000, which a lot of people did speculate may have been the bottom for Bitcoin. Some are speculating a lot lower, and some are still thinking that we are going to continue to go lower. But there is something interesting that we do need to take a look at. So Bitcoin, which is the slowest performing cryptocurrency, has recovered and did recover about 15% total today. Sunday, we had recovered about 17% from that peak. So that's certainly good. A 17% move to the upside, a 17% bounce is significant. That is significant, ladies and gentlemen. Let me know if you guys think in the comments that the crypto market has bottomed out. Let me know if you all think the crypto market has bottomed out. Go ahead and let me know in the comments, and make sure you all smash up the like button and subscribe with notifications on so you do not miss these time-sensitive videos that I make that can help you in the crypto market significantly. So right now we are seeing Bitcoin form this trend. Bitcoin is forming this trend. We are keeping a close eye for sure. And this trend is none other than an ascending triangle pattern. So this might, end up being bearish, might end up being bullish. Nobody knows right now, but things are looking good. And I'm going to tell you why things are looking good in just a few moments. But Bitcoin is attempting to break this resistance level. If Bitcoin can continue today, if what is said today by Jerome Powell is good, if what is said is bullish, we will see probably Bitcoin and cryptocurrencies make a move to this resistance level and most likely surpass it with a nice breakout. So if Bitcoin and cryptocurrencies continue to go up, see if I can move this chart over a little bit. I'll have to move it over here too. If Bitcoin and cryptocurrencies can continue to move up, we can see another significant move. And the way we can see how much of a move it is we just use the length of the pattern, which a lot of times ends up creating a price target or an area where generally this type of breakout would move to. So if Bitcoin and cryptocurrencies do continue to recover, if the stock market continues to recover, we could see a significant move from this breakout region. And we're going to measure and see how big that move could be. We are looking about a 14% move for Bitcoin. So that could be a 15 to 20% move for cryptocurrencies. And from our current position, that's going to be about a 20% move for Bitcoin. Just about a 20% move as we see right there. So this is what I personally am looking for, but we must also be aware of the bearish scenario. If Bitcoin ends up coming down, and attempting to break outside of this, we could see just the opposite move for Bitcoin. We could see a bearish breakdown, and that would take us below 26,000, which from our current position is going to be potentially, let's see how much it is. I don't know why it's not working. About a 13 to 15% move from our current position. So we will have to see what Bitcoin and cryptocurrencies end up doing, and that's going to take us to about 25,400. So that would be around 26 to 25,000. That's going to be kind of like our price target for this bearish move to play out, which if it does play out, we probably would see a breakdown. We would see somewhat of a bounce, and then we just continue this breakdown. And a lot of people are going to be faked out. A lot of people get faked out in these retracements where there are big moves to the downside. We're like, okay, well, let me buy the bottom. Goes up, they're like, yay, they close their eyes, they go to sleep, and they wake up. And that type of move happens. That move happens when there is a bearish breakout happening, when the overall trend is bearish, and that's what you have to watch out for. So we will be keeping a close eye on seeing what cryptos do. Me personally, I think cryptos are going to go up. Let's take a look at Ethereum. Ethereum actually ended up breaking out last night. Ethereum last night ended up having a very big peak on Sunday. Ended up coming down, forming a symmetrical triangle pattern, had a beautiful breakout, and watch, it probably came exactly to our price target, generally about the length of a triangle. Came exactly to the price target of about 2,120 this morning. We saw this, a nice bullish move for cryptocurrencies this morning. So a pretty sight to see for sure. How do you predict if crypto will go up? Well, personally, I don't predict anything. Technical analysis is using statistical probability. So when we see the price, the green and the red, those are candlesticks. And they represent a time period, and they represent, in addition to that, what that particular cryptocurrency did in that time period. So if candles are green, they have gone up. If they are red, that means they had gone down in that time period from the start to the end of that time period. The end is, when the cryptos end up whatever particular level. If it's lower or higher, they will be green or red. Now, when we see these candlesticks come all together, we can see these psychological patterns play out. And when these psychological patterns play out, there's generally a statistical probability of a particular outcome. So when I do see these patterns, I don't know if it's going to go up or down, but when I do see these patterns, I can have an idea if it is going to go up. But once we start getting a breakout, then I have a very clear direction, and understanding that the breakout is going to be a particular level, give or take. And that's how I make money. That's how I personally trade. Technical analysis is basically horoscopes for business people. Horoscopes is more like speculation and kind of like fantasy to a degree. Technical analysis is an analysis of of the current price of the stock or the crypto, whatever it is, and the analysis has an accuracy sometimes of 70 to 80%, sometimes even higher. So that's the importance of technical analysis. And in addition to that, the people that are moving the markets, the whales, the institutions, the people that are causing these cryptos to go up and down, they all are using technical analysis. A lot of them use AI, a lot of them use bots, and they are the ones that move the markets, but they move the markets based on these technical levels. So that's why you see traders like myself and people all around the world constantly pulling up these crypto charts. And it's for that express purpose. So we did have a drop today from this morning, about 9:46. We saw a pretty significant drop, and that was a 4% drop. That was very interesting to see how fast cryptos have been moving. Cryptos have been moving really fast. They go up and then they go down really fast. And if you trade, if you can sell at the top and then you buy the bottom, you can make so much money, especially when you can see it's very clear that the market is going to go down. And you're able to do that by looking at some indicators. Like personally, what I use is just for an example, the MACD. I was able to see that cryptos were going to go down when the MACD crosses here, because it shows me that the bearish momentum has taken place at the top, that it's not going to go up any further. So what that tells me is to sell. And then guess what? I wait till cryptos start to bottom out, till we start to break higher highs and higher lows, and this bullish confirmation pattern or the bullish continuation pattern. And I'm taking a look at an additional indicators and to see how strong this movement is, to take a look at some moving averages to see how the price is reacting with these moving averages, whether it's above it, whether it's below it. Certain things like that will help us to understand if the market is going to continue to go up, if it's going to go down. And it gives us an indication, because a lot of times, cryptos, they can look very bearish and then they end up popping up and being bullish, and then they can look very bullish and they end up being very bearish. And a lot of that has to do with news and what the Fed or the government is doing. There's certain factors that will cause that to happen. Technical analysis is about 75% accurate for me personally. Now, if you all want to learn technical analysis before I raise the price of my course, right now it's 66% off. You can click that link right there that I just posted. I pretty much teach every form of technical analysis, a bunch of indicators, a bunch of patterns, all of my secrets in investing and trading cryptocurrencies. Highly recommend it. And also in that top pinned comment, which is my Patreon, you can get access to my buy and sell alerts and my constant market updates, so you guys can know what's happening at all times in the crypto market. And I also post updates for the stock market. Not that we trade stocks, but if you want to understand where cryptos are headed, they are led and guided. They're led and guided by the stock market. So here is a couple of things that I need to show you all right now. So this is the NASDAQ. The NASDAQ is about to break the highs for today, and this is very good. We have the NASDAQ, it's beginning to recover. We have the S&P beginning to recover right now. Here we go, 406. Okay, we broke the high for today. So we have the NASDAQ, the S&P 500. We have the major indices. They are breaking highs right now. They are recovering. When cryptocurrencies recover, they are recovering because of the stock market, and we will be getting to Luna in just a moment. But the stock market is beginning to recover, and something even better, ladies and gentlemen. Remember what I have been telling you is that the dollar, this is the US dollar right here measured by the DXY. Now the DXY, whenever it goes up, cryptos crash, they go down, they look terrible, but it is going down. This is the 5-minute time frame. It continues. Most likely it's going to break this support level today. The DXY is going down. Cryptos are going up. Stocks are going up as of right now. And this is a very good sign. When we see the US dollar going down, when we see it correcting, this is the US dollar paired with the Japanese yen. We are seeing that this thing is quite bearish. When we are seeing these things, we have an indication that the market is recovering to a degree. Now, if the NASDAQ, if the SPY, the S&P 500, if the stock market can continue consecutive days in the green, several days in the green, this is a very, very good sign that cryptos are going to continue to bounce up. So the DXY is looking bearish. Now, some of these altcoins are setting up to make some really big moves. And remember, nothing of this video is financial advice, just my own opinion. So we have Cardano. Cardano has been making some very good moves from the bottom to the top. Cardano saw a 60% gain. Cardano went to 38 cents. Wow. Just the type of money you could buy in Cardano. Look at that. Shiba Inu. So Shiba Inu is up 3% today. That is pretty good. From the bottom to the top, it did end up bouncing 60% as well. Let's take a look at Dogecoin. Somehow can't see Dogecoin on here. A massive list of cryptos I'll show you all. Here we go. Come on, Dogecoin, where the heck are you? I somehow cannot see it. You guys probably see it. Probably scrolling past it a whole bunch. There we go, Dogecoin. Come on. All right. So Dogecoin from the bottom to the top had bounced up about 46%. Not as much as some of these other altcoins. Let's take a look at XRP. Let's see how XRP is done. This is another one of my favorite altcoins. For some reason, a lot of my altcoins have been deleted. All right. So XRP went just like Cardano, 34 cents, and it has only bounced about 42%. Now let's take a look at Luna. Okay, I wonder if this is like a delisted pair. Let's see if there's another Luna pair we can take a look at. We're going to see if we can catch some Luna. All right. So Luna from the bottom to the top. Look at this. Massive pumpage right here. I don't even see a bottom or a top. That's how much it has dropped. Wow, we really have to zoom in on this price action, don't we? Wow, this is insane. So the bottom actually was May 16th. Today is the 17th, if you didn't know. And there was a 100% bounce. I ended up buying somewhere in here. I ended up buying a couple of days ago. I bought 2.5 million coins for like $1,000. It's worth about $400 now. Maybe it's bounced up a little bit. But it's not really much happening with Luna. And the question is, can Luna get up there? Can Luna go to $1? Can Luna go to a penny? Honestly, it's not possible anymore unless they decide to burn tokens, because they inflated the overall coins, I believe 16,000% or something. So the likeliness of Luna getting to a penny or $1 is pretty much impossible unless, again, they decide to burn coins. Thank you, Kenny. I appreciate the super chat. So I ended up buying some Luna just in case it goes up. Who knows? If it goes up, I don't know. I put $1,000 in. Maybe it'll be worth 2,000 one day. Maybe it'll be worth 10,000, 20,000, 30,000. I don't know. I just put money in there. Money that I could afford to lose, of course. I would not have anyone invest, the word invest, certainly not invest in Luna at all to any degree. I personally would stay away from it, especially if you don't have money to throw away. If you don't have money to throw away, just stay away from it. Buy a coin that actually has real utility, trust, real value, that isn't pegged to a stable coin. Am I happy with my purchase of Luna? Yeah, I'm pretty happy, honestly. Maybe it will be $10 next week. Hey, that's very possible. Maybe it will be 0.0001. So if you all want me to take a look at a particular coin that we can look up, make sure you all just let me know. But does anybody know how we can watch the Powell speech? We're going to have to try to pull it up. We want to see what he says, because depending on what he says is going to either shake or break the markets. So cryptos have bounced up significantly already. And the markets might be, they may have sold off, you know, taking profits. There's a lot of trading right now in the markets. That's why this morning there was a bit of a sell-off, because people were taking profits. Maybe people were selling in anticipation. A lot of traders, what they will do is they will sell after a lot of green in anticipation of an event that's most likely going to be taking place, which is, of course, Powell. He is going to be speaking live today. And maybe they're anticipating a drop with what Powell says today in about 8 minutes. 7 minutes to be exact. So I might be able to stream it here on here for us. I'm looking it up on YouTube, see if we can get it live. He's going to be speaking on Wall Street. Let's see if we can catch this. Hold on. I think we're going to wait for the markets. We're going to wait for the markets a little bit, because we are getting a little bit of a pump, a little rally. We might get a really big move. We might get a really big bullish move here, guys. A big pump. Like, it's going to destroy past this high right here today for Bitcoin and Ethereum. And take a look at Bookmap here. Always want to take a look at Bookmap, see what it's doing. See what the whales are doing. So the Bookmap here. And let me know if you guys know where we can pull up this stream at. So the Bookmap here is basically all of the orders for cryptocurrencies on all the exchanges. And we can see where all the orders are at, which shows us resistance levels, support levels. And we're seeing a lot of orders in the higher ranges, which is good. It's a good thing. So 31,500 for Bitcoin, 31,000. It looks like the whales are thinking that the price is going to edge higher because the majority of the liquidity, which we are seeing here, is in the higher ranges. If you buy my course, is that considered financial advice? No. But there is a 30-day money-back guarantee. It's considered buying a course. Now, if you guys want access to this, it's a small membership fee. You can get access to that. The link should be in my video description. It's called Book Map. Make sure you use my link so you get a discount. So we are seeing a lot of liquidity in the higher ranges. We're going to be keeping a close eye on that.
Swear I won't forget this. Why do I regret this? In my mind reckless, thoughts are feeling endless. Sitting up, I'm breathless, anxiety's infectious. I feel so defenseless, betrayed and embarrassed. I hate being open, I hate being broken. I feel like an ocean filled up with emotion. Anger ain't.
We're going to see if we can catch Jerome Powell live speaking. And as of right now, it looks like the market's taking a little bit of a dip. See what the dollar's doing. The dollar is attempting to go down. It's actually going to break this support level here, most likely. The S&P 500, 406. Guys, this is a very, very good number. The S&P 500 was 385 just last week, and that is very bearish. This thing bounced up to 406, which is significant. The S&P 500 is bouncing up. The NASDAQ is bouncing up. These are good moves that we want to be paying attention to that help us understand. Yes, look, there's a little bit of a dip in cryptos, but the dollar's going down. The indices are going up. Cryptos are soon going to follow. You'll see. I might use exchanges to keep my cryptos on. Does anybody have the link to see Jerome Powell? I'm gonna try to see if we can get it. Can I do a Twitter space next? I might consider that. I'll start doing a lot of live streams here. So make sure you guys smash up the like button if you guys would, and subscribe with notifications on if you have not done so already. We are going to be taking a look to see what cryptos are going to do, how they are going to react to this current market, and what Jerome Powell has to say. You're seeing a little bit of a pullback right now, maybe a little bit of fear. The SPY is coming down. NASDAQ is looking good. The dollar might go up. Getting a little bit of a bounce in the dollar here. It usually happens when the Fed speaks. So we're probably going to end up seeing a pullback, which is going to be some manipulation. So there's going to be some volatility here in just the next couple of minutes. This is the US dollar here. Cryptos are pulling back. All right, we're going to be able to get it here live on YouTube. See if we can get it. All right, perfect. All right, we're just waiting for him. We're just going to wait for Powell. We are seeing cryptos take a dip. The Wall Street Journal is streaming it. Cryptos are taking a pretty heavy dip right now. Just some market manipulation, honestly. Pretty heavy dip right now. Just some market manipulation, honestly. Pretty heavy dip right now. Yeah, a lot of times when the market actually is going to go up a lot higher, you will see a dip due to whales and manipulation. They try to scare people out of their positions to sell, and that's exactly what is happening right now. You'll probably see the dollar going up as a spike, and the SPY and the NASDAQ are going down just a little bit, nothing crazy. Bitcoin back to about $30,000. Here we go.
Welcome, Chair Powell. Thank you so much for joining us this afternoon. Thank you, Nick. It's a pleasure to be here.
And I want to welcome our audience watching along on WSJ.com, Twitter, and YouTube. So, Chair Powell, let's get started. 2 years ago, you acted very quickly and decisively. You did things that Fed chairs straight up have not done, given the emergency of the pandemic. Now, I hear a lot today, especially from our readers. They look at the economy, they look at how high inflation is, and they look at the state of monetary policy, and they say the Fed is not reacting with the same urgency. What do you say to people who say that you are not treating high inflation today like an emergency?
Well, I guess I would start by saying this, Nick, that we know that this is a time for us to be tightly focused on the path ahead and on getting inflation back down to 2%. We know how people are suffering from high inflation, and we have both the tools and the resolve to get inflation back down. And no one should doubt our resolve in doing that. And I think if you look at how quickly we've moved in the last few months, really, then you'll see that financial conditions have tightened quite a bit. What we need to see is inflation coming down in a clear and convincing way, and we're going to keep pushing until we see that.
So to get into some of those tactics, the Fed raised interest rates at its last meeting by a 0.5 percentage point. That is something the Fed hadn't done since 2000. And you've said that you think the Fed may need to do that again at your next 2 meetings. Why are you being so specific? Doesn't that limit your options?
Well, I didn't say, so we make the decisions at the meetings. What I said was a couple things. First, I said that we decided to raise the federal funds rate, range for the federal funds rate by 50 basis points at the last meeting. We also said that we thought ongoing rate increases would be appropriate. And during the course of the meeting, it became clear that there was very broad support on the committee for having on the table the idea of doing additional rate increases of that magnitude at each of the next 2 meetings. And that's what I said. And that's short of a prediction or a statement or forward guidance that we're actually going to do this. But I would say if the economy performs about as we expect, then that's something that'll be on the table. And honestly, it's so things are so uncertain in the economy right now. It's very difficult to think about trying to give guidance out into the future. We don't know the path of the economy. There are many global events going on that can affect that are really not under our control as well.
So if the base case is to do a 0.5 point at the next 2 meetings, why not just do a percentage point at your next meeting, rip the Band-Aid off?
Well, as you know, inflation works through, monetary policy works through expectations. So markets are pricing in a series of rate hikes, a significant series of future rate hikes, amounting to already having done that. So we like to work through expectations, and I'm not blessing any particular day's readings, but it's been good to see financial markets reacting in advance based on the way we're speaking about the economy. And the consequence, as I mentioned, is that financial conditions overall have tightened significantly. I think that, if you broadly across financial conditions, you're seeing that, and that's what we need. What we need is to see really growth moving down from the very high levels that we saw.
All right, cryptos should be going up here.
Moving down to a level that's still positive, but that will give the supply side
you're going to see a big bounce.
And a chance for inflation to come down as we get supply and demand back back together.
Fingers crossed.
A couple of years ago, you talked about moving slowly when you're in a dark room, when the lights go out. Obviously, things are different now. It's harder to do that. You're moving in much faster increments as you raise the price of overnight money. But I wonder, as you look ahead, what are you going to be looking for to determine whether to increase that pace of 0.5 percentage point increases, say to 0.75 point, or to slow things down to the 0.25 point
Strap your seatbelts on, ladies and gentlemen.
By which the Fed has raised interest rates more often over the last couple of decades?
So I do think, by the standards of central bank practice in recent decades, we're moving about as fast as we've moved in several decades. But I guess the way I would say it is this. What we need to see is clear and convincing evidence that inflation pressures are abating and inflation is coming down. And if we don't see that, then we'll have to consider moving more aggressively. If we do see that, then we can consider moving to a slower pace. And it's going to be a judgment call that we make going forward as we carefully monitor incoming data, the evolving outlook. How are financial conditions changing? How are they affecting the economy? And that's how I think about it.
So back in 2016, you were a governor of the Fed, and in late 2018, you were chair of the Fed. There was a significant tightening in financial conditions. There were some global growth shocks. Global growth was slowing, and the Fed pulled back from its plans to raise rates maybe as aggressively as would have been the case before all of that happened. With the global
Everybody
shocks that
spam
we're facing
rockets.
now, the recent tightening in financial conditions that we're seeing now, what would you need to see on that side of the markets to reassess the pace of rate increases right now?
You know, the underlying strength of the U.S. economy is really good right now. The U.S. economy is strong. The labor market is extremely strong. Growth this year has been marked down, but is still at very healthy levels. So you saw today's retail sales number. The economy is strong. The consumer balance sheets are healthy. Businesses are healthy. The banks are well capitalized. So this is a strong economy, and we think it's well positioned to withstand less accommodative monetary policy, tighter monetary policy. Of course, we do monitor global events, and global events have been very important drivers of economic conditions lately. The war in Ukraine is something that has upset the global commodity picture, while also threatening the global order more broadly. And the rolling shutdowns in China are still going on, and those are having an effect on global supply chains, of course. So we watch those things, and we watch how they affect the U.S. economy. The effects are very uncertain. They probably weigh on growth, downward on growth, and probably push inflation up at the margin. But even through all that, we see the U.S. economy continuing to show real strength and be well positioned to handle the policy changes that we're making.
Chair Powell, a number of your former colleagues, Richard Clarida, who was vice chair until this past January, Bill Dudley, the former New York Fed president, have said recently that they think that the Fed is going to have to raise its short-term policy rate to 3.5%, maybe 4%, maybe higher. How are you thinking about the destination right now for how high you might have to raise interest rates?
So, as a policymaker, the way I'm thinking about it is that right now we're raising rates expeditiously to what we've been saying, to a more normal level, which is something that we'll reach maybe in the fourth quarter. But it's not a stopping point. It's not a looking around point. We don't know with any confidence where neutral is. We don't know where tight is. We just don't, and particularly in this environment of higher inflation and very strong growth and a really tight labor market. So what we're going to be looking at, meeting by meeting, data reading by data reading, is what's happening with financial conditions and what's happening with the economy. Really, with what effects are changes in policy having on the economy? Are we starting to see what we need to see, which is a really clear and convincing evidence that inflation is coming down? That's what we really need to see. So we'll be watching for that. If that involves moving past, broadly understood levels of neutral, we won't hesitate at all to do that. We won't. And honestly, we will go until we feel like we're at a place where we can say, yes, financial conditions are in an appropriate place. We see inflation coming down. We'll go to that point, and there won't be any, hesitation about that.
Just as it can be hard for you to know when to stop raising interest rates, it can be hard to know when to start. And, obviously, these things look blindingly obvious in hindsight. But I want to go back to last year and ask you, what went wrong last year from a policy perspective? Again, with the benefit of hindsight, knowing things now that you didn't know then, what do you wish you had done differently last year?
So we have to make these decisions, and we do make them in real time based on what we know at the time. And so I would say, if you replay last summer, we had a real spike in inflation that began in March, April, May, June of last year. And then inflation came down month after month after month for about 4 months, anyway, through the end of the summer. So we were concerned because we saw inflation spreading more broadly, and because we didn't see supply chain issues improving. We didn't see labor force participation improving. So we had real concerns. But still, the incoming inflation data were kind of consistent with our story. And then the data really changed, pretty thoroughly beginning in October, and we responded very much to that. So since then, we pivoted in our policy, and since then you've seen really quite significant tightening in financial conditions. I don't know that financial conditions have tightened more quickly than this in a very long time. And but that's what happened. And I've said for the last 2.5 months, I've been saying that if you look back in hindsight, give yourself 20/20 hindsight, then yes, it probably would have been better to have raised rates earlier. We were looking at some weak employment reports. We were looking at inflation reports that were coming down. When that stopped, and when the data started pointing toward a stronger economy with higher inflationary pressures, higher wage pressures, we didn't hesitate. From that point, we've really moved. I would say almost expeditiously. Since then we have moved, and you see where we are 6 months later since that happened. You now have the 10 years up, 140 basis points. The 2 years up almost 200 basis points, and the 2-year Treasury is a pretty good measure of policy expectations. So quite a lot of tightening, and appropriately so. Inflation is way too high, and we need to bring it down, and we're going to use our tools to do that.
Obviously, the pandemic has made economic forecasting more difficult than it's been in a long time, and I wouldn't presume to think that it's easy. But looking at demand last year, the fiscal stimulus that was approved by the administration and Congress last March, it was far larger than what your own economists at the Fed were anticipating. Did that end up putting the Fed behind the curve in terms of you just didn't judge demand properly because of the much larger stimulus that was approved?
So it's really not our role in economic policy within the government to reach judgments on economic actions taken by Congress or by the administration. There are other parts of the government that do that exact thing, but it's really us. So I guess I would say that there was a lot of stimulus put behind the U.S. economy. That was both monetary policy and that was fiscal policy. But still, you can't get the kind of inflation that we've gotten out of that much demand. That was a lot of support for demand. You can't get the kind of inflation we have without these supply bottlenecks that we've had, and that includes the supply chain problems that we've had and the shortages. If you look at automobiles, that's a great case. Ordinarily, car makers would have just made more cars. There was tremendous demand for cars, but for really idiosyncratic set of reasons, there weren't enough semiconductors, so there aren't cars, and so you have tremendous vehicle inflation. That's just one example. Same thing, we didn't see. We had a real hit to labor force participation. We didn't see that coming, and so really these supply side factors, you have to add them in to any kind of economic model to get the kind of inflation that we have. We clearly had very strong demand, and we knew that. What we didn't know and anticipate was how large the supply side effects would be and how persistent they were. And we now know that in hindsight, and we see how sticky they are. And so, as I've mentioned, we're not setting policy on the expectation that we get relief on the supply side until we actually do.
All right, so that was 2021. Then comes along 3 months ago, the war in Ukraine, which has obviously been enormously disruptive to millions of people in Eastern Europe, but also has had a profound effect on energy markets, commodity markets, and we also have new lockdowns in China. How have those events changed the difficulty of what it is that you are trying to do?
Well, I mean, clearly they've raised the degree of difficulty more importantly, for the people around the world who are looking to have a continued expansion in the economy, but also for us from the standpoint of policy. So, the war in Ukraine is pushing up commodity prices for both food and energy. And we don't really know how long that's going to last now. It might have thought at the beginning, and we don't make those kind of judgments, that it wouldn't be long lasting. Now it looks like it may be, so that may be a persistent effect. Same thing with the rolling shutdowns in China. They won't last forever, but they'll last for some time, and they're having an effect too. And what they're doing is they're preventing any healing of supply chain problems. So that's going to make it harder for inflation to come down. And so really they've added to the degree of difficulty to what was already a challenging project.
So we heard here before lunch from Barry Biffle, the CEO of Frontier Airlines. He says he's raising prices because of fuel costs, and there's a pilot shortage. And now those are things outside of your control. But you said just now that the Fed can no longer set policy on the hope or expectation that supply chains will give you a lot of help here. So what does that mean for Fed policy? If these things are out of your control in the supply chain, or if energy markets don't improve anytime soon, what is the implication of that for policy?
Well, it doesn't have much of an implication in the near term because we clearly have a job to do on demand. So there is an imbalance in the economy broadly between demand and supply. And so we can't really affect supply. The things that are really supply side issues, our policies don't work on those. But we have a job to do on demand. And I would, for example, point to the labor market where there's more demand for workers than there are people available to work by a substantial margin. And so that means that wages are moving up, which is a great thing, but they're moving up at a pace that is not consistent with 2% inflation. So there's a pathway for us to use our tools to try to moderate demand, still to a positive level, but not at the high level that it was at, for example, last year, and try to get demand and supply back into alignment in the labor market or close to it, so that there'll still be positive wage increases and healthy wage increases, but they'll be at a level that is more consistent with 2% inflation. Wages are a very important determiner of inflation over the longer term. So that's just an example of what our job is, and we think we can do that job. In the meantime, of course, everyone is looking for the supply side to heal more. We don't see much evidence of that yet, but I mean, I still think in the longer run, that has to be coming. There will be semiconductors and other things that are in short supply right now.
A lot of people, though, are skeptical that you can get inflation down to your 2% goal without a recession. What do you know that they don't?
I don't know anything that they don't. I mean, I would say there's no disagreement here, really. It is going to be a challenging task, and it's been made more challenging in the last couple of months because of global events. So it's challenging because unemployment is very low already, and because inflation is very high, and so. But I will just say there are pathways. Clearly there are pathways for us to be able to moderate demand, get demand and supply back in alignment, and get inflation back down, while also having a strong labor market. Doesn't mean that the unemployment rate needs to remain 3.6%, which is a very, very low rate, historically low. It's 1/10 above the 50-year low. You'd still have quite a strong labor market if unemployment were to move up a few ticks. So I would say there are a number of plausible paths to having a soft, or as I've said, soft-ish landing. And our job isn't to handicap the odds; it is to try to achieve that. The last thing I'll say, though, is that achieving price stability, restoring price stability, is an unconditional need. It's something we have to do because really the economy doesn't work for workers or for businesses or for anybody without price stability. So it's the bedrock of the economy, really. And so that's something we need to do if we want to have the kind of labor market that we all want to have, which is one where there are tight labor market conditions and wages are moving up and people are changing jobs and opportunity is growing and all of that. But inflation is not high and eating up people's paychecks.
So, Chair Powell, I heard you refer to a softish landing, and I want to ask, what's the difference between a soft landing and a softish landing? Because if the pilot tells me don't worry, we're going to have a softish landing, I don't know, I start to wonder what he's talking about.
Well, so you fly around, sometimes the landing is just perfect, right? And sometimes it's just a little bumpy, and so it's still a good landing. You don't even notice it, right? So, but in this, what does it mean in this setting? So I guess I would say this: we have to get inflation down to 2%. We've got to restore, our definition of price stability, and we will do that. It will be challenging to do that we have to slow growth to do that. That's the idea, is that growth has to move down. That's what has to happen for inflation to come down. We don't have precision tools. We can't say let's dial it into this exact level. We raise interest rates, that affects financial conditions, and financial conditions affect the economy. So there are a couple of steps there, and it is not in any way a surgically precision set of tools. So I would say there could, as I mentioned, there could be some pain involved to restoring price stability, but we think we can maintain a strong labor market, defined as a labor market where unemployment is low and wages are moving up and that kind of thing. It may not be the perfect labor market, but it will be a strong labor market.
So I'll move on from this subject, but I want to ask if there's a historical example that you could point to for what you're trying to achieve. Some people talk about the late 1990s, but even then the unemployment rate continued to drift lower after the Fed raised interest rates. So is this something that we have any recent historical experience with, what you're trying to do here?
Well, so you can look back to 1960. There have been 11 tightening cycles. And in none of those cycles do they look anything like the current cycle. We've never, I won't say never, but I'm not aware of a time when we've had 2 job openings for every unemployed person. And it's just an extraordinary, it's a once in a century pandemic, followed by historically large fiscal and monetary policy support, followed by a war in the middle of Europe between 2 commodity makers, followed by partial shutdown of China, a very large economy.
Should get a bounce here.
Manufacturing center, one of the manufacturing centers of the world. So, can you look in the history book and find that? No, you can't. And so I just think we're in a world of firsts. So I wouldn't say just because it's never happened before, it's impossible. I wouldn't say that. I would say that there are plausible paths, and that this will be challenging, but we'll do our best to achieve it. And in any case, we will achieve price stability.
So what are you looking to see, either in inflation or in financial conditions, that tells you that things are moving in your direction? Because it feels like there's a chance here that inflation does come down in the second half of the year, even though it'll still be above your target. But there's also a chance that the labor market tightens even more. And I wonder how you would, I know it's hard to respond to a hypothetical,
Whales try to fake everybody out.
Seem like a crazy hypothetical to be considering right now. A situation where you do get improvement on inflation, but you do continue to overshoot an estimate of what might be considered a more stable employment situation.
Well, the main thing is to get inflation down. We all read, of course, everyone reads the inflation reports very carefully and looks for details that look positive and that kind of thing. But truthfully, this is not a time for tremendously nuanced readings of inflation. We need to see inflation coming down in a convincing way. That's what we need to see. And until we see that, we're gonna keep going. We're not gonna assume that we've made it until we see that. And we're not seeing that right now. There are some promising signs. You can point to them. There are some signs that are not promising. But really, that's what we're looking to see. So, with the policy rate where it is, you don't need to. I mean, what we need to do is push ahead with rate increases, and make the evaluation that I mentioned earlier. Is this the right level? Should we slow down? Should we speed up? I think that's what we'll be doing as we see incoming data, and make a judgment about where are we? Have we gotten as far as we need to get? And until we do, we'll keep going.
Now, a number of people have suggested to me that the one thing that might slow you down, or at least make this much more difficult, would be some kind of market cataclysm. And I wonder, in part, if that's why you're trying to be more transparent, not erratic, making sudden moves on your policy moves. But my question there is, Where's your level of concern that financial stability and controlling inflation by raising interest rates, maybe a lot, might be fundamentally incompatible in that raising rates causes financial disruption but doesn't actually bring inflation under control? Where is your level of concern around that situation?
I don't see that happening. I mean, we monitor a very broad range of financial conditions, and we're doing that now. We'll keep doing that, and they're different cycles look different. Sometimes the tightening takes place in one market, sometimes in another, sometimes in credit spreads, sometimes in all of them. So we're watching them all, as a group. And of course, their volatility has been up a little bit, and that has some effect on liquidity in some markets. But nonetheless, the markets are orderly; they're functioning. I think they're processing the way we're thinking, the way that the FOMC is thinking about policy, pretty well. And I think that the idea again is to have financial conditions tighten to the point where growth will moderate and still be positive, but moderate to the point where supply and demand can get back in alignment and where we can get inflation back down to 2%. And I see that broadly working pretty well right now. Obviously, there are some volatile days and volatile markets, but so far, I see us as getting through this fairly well.
So this is the Future of Everything Festival, and in the time we have left, I want to look ahead at some of the issues on the horizon for the economy. Labor shortage. I wonder if you see that as something that might be a more persistent rather than just a cyclical feature in our economy. I mean, if you look at net immigration since 2017, because of policy reasons or the pandemic, it's been basically flat. Are labor shortages here to stay, and what would the implications of that be for the Fed?
I think there is a risk that we'll have a persistent imbalance between supply and demand in the labor market, and you put your finger on it. It's part of its population. There's the labor force. There's the labor force participation rate. But if the population is growing more slowly, there are going to be fewer workers, and that's a big part of the story. Really, in recent years, is immigration has been quite low. These are not tools or things that the Fed has or places where we seek to guide policy. But if you have a slower growing labor market, you're going to have a smaller economy, and you could be in a situation where these wage pressures remain longer. Of course, we'd love to see labor force participation come up, but I do think that I think that's a risk in the medium term, but it's really one for other policymakers to look after.
And related to that, economists have this concept called the natural rate of unemployment. The idea that when the economy is finally balanced, there's a level of unemployment that corresponds with stable inflation. And I went back and looked. When you joined the Board of Governors almost exactly 10 years ago, the participants once a quarter project where they think these things are. And so in 2012, you and most of your colleagues thought that level was between 5 and 6%. Now you and your colleagues have been writing down that it's somewhere between 3.5% and the low 4% area. But how much weight do you put on the prospect that the natural rate of unemployment, perhaps temporarily, perhaps not, has actually shifted higher and might be closer to where you and your colleagues thought it was 10 years ago?
Well, no, I think that may well be right. I think there was a tremendous amount of turbulence in the labor market, and so in theory, the sort of matching function that is the labor market could be disrupted. People are changing jobs at all-time record rates, and there's just a lot going on. People are reevaluating their commitment to the labor force. So all of that points to a higher natural rate of unemployment. But the other thing that's clear, though, is that the effective natural rate can change pretty significantly over the course of an expansion, particularly a long expansion like the last one, where you finally had 3.5% unemployment and no sign of either wage or price inflation. But you had a couple of years there where unemployment was well below 4%, and you didn't see inflation. So that suggests that as that longest expansion in recorded U.S. history, 10 years and 8 months, as that went on, what you saw was matching getting better and better and better and more efficient, and the natural rate coming down. Right now, it feels like the actual unemployment rate is not the perfect. You have to think about where the natural rate is compared to today's employment rate, and it does appear to me that it's probably well above 3.6%. But it should shift down as this highly unusual time in our economy and in our labor market goes on. We should see that settling down, and we should see the natural rate declining, and that itself could reduce wage pressures and inflation pressures.
Well, all things equal then, I mean, would you, as the chairman of the Fed, feel more comfortable today if the unemployment rate were a little bit higher, somewhere in the 4s instead of in the 3s?
I'm never going to say that more people need to be out of work. I would love to see a labor market that's more in balance, and ideally that would start with the number of vacancies coming down, and that's one of the things that is vacancies and quits are at all-time highs, and that suggests a labor market that's out of balance, and there's more demand than there are workers. So I'd love to see people come back into the labor force, and we are seeing some of that. We'd like to see that continue, and we'd like to see the job vacancies level come down so that you're seeing supply and demand get back together, and the unemployment rate will shake out where it needs to be. It's as I mentioned, it's close to a 50-year low right now.
Moving from sort of the post-pandemic labor market to the supply chain and inventory management, it seems much more possible than it did a year ago that we're going through a big shift in how businesses manage the supply chain, and the forces of the last 25 years that really helped central banks keep inflation low, businesses pricing an efficient supply chain now you might want resilience. You might want to source goods from multiple suppliers. That could embed higher costs. So what would be the implications for the Fed if we're going through some kind of regime shift where those forces that helped bring prices down over the last 3 decades are reversing now?
So I do think you've had sort of a perfect storm of disinflationary forces for the last quarter century, and that's globalization, amplified by technology, its aging population, certainly in the Western democracies, and all of that and low productivity, that has all led to disinflation. And so some have been making the argument for years now that those forces were all going to flip. I don't think they would flip overnight, but I would say, certainly in the near term, there is a real possibility that globalization will go into reverse to some extent. And, the trade-off would be those supply chains were very efficient, but they weren't very robust. And they broke down pretty badly in the pandemic. So, I mean, to the extent you do that, you'd have more security in your supply chain, more stability perhaps, but it might not be quite as efficient as the amazing global supply chains that we had, which were very, very fast and flexible and all that. So I'm not sure what the overall you could see higher inflationary pressures for a time, but at the same time, policy could respond to that. So I don't know that you'd see higher inflation. So it's hard to say. Globalization obviously brought its costs and its benefits, and it benefited lots of parts of the world. And from our standpoint, we got a lot of products cheaper, but our manufacturing base in the West is vastly diminished. And you're right. It would be a very different world if we see that go into reverse or pause.
We're almost out of time. I'm going to try to sneak in one last question to you. You were confirmed last week to a new 4-year term with significant bipartisan support. Someone joked to me, you see that sort of support only to adjourn the Senate these days. You've been through a lot in your first 4 years as Fed chair, especially in the last 2. Is there anything you've learned in that time that might change your approach to this job in the next 4 years?
I think that there's an overwhelming need to get inflation under control, and that's what I'm thinking about. And that's what we're thinking about here at the Fed. In times when you're at 2% inflation and the economy's growing and unemployment's really low, you can have a more balanced thought about what she should be doing at work. I think we know what we need to be doing at work right now, which is to get inflation under control, and we'll use our tools to do that. That's my dominant thought about the future at the Fed. It's a great honor to be able to serve a second term, and of course I'll do my very best, to carry out our obligations under the dual mandate, and leave it there.
Well, Chair Powell, thank you so much for joining us this afternoon. It's an honor to have you with us. And thank you to our audience on WSJ.com and Twitter.
All right, so there you have it. Just a whole bunch of mumbo jumbo. Nothing of substance, obviously. And that moved the markets. And now, watch, cryptos are probably going to end up going up while the US dollar goes down. Maybe. Maybe it'll just flip-flop every 2 seconds and crash and pump. But as of right now, the US dollar is going down as a result of that live stream on YouTube. Yes, your money is basically dependent upon a live stream on YouTube. Cryptos are going up. Right now, they are bouncing up. So there's a lot of people that were able to buy in this dip, which was a decent dip in my opinion. This was a decent dip. The overall trend is quite bullish since the crash and correction. And any of these significant dips, when they do end up bottoming out, have ended up being quite profitable for a lot of people. Going to the 1 minute chart, we are seeing about 6 to 7 consecutive green candles. I would conjecture that the SPY is going back up as we are currently seeing it. Let's see, the US dollar, you're seeing a dip. Let's see if it will continue to dip. That is certainly the question. That meeting did cause volatility, and the primary reason why it caused volatility is because he spoke on inflation, about raising interest rates, which causes fear and panic to investors. It causes FUD, but he did talk about a softish landing, basically pulling off the band-aid or raising interest rates to the full degree to combat inflation as fast as possible. They're trying to slowly do that versus just do it all at once, which is getting somewhat of a positive response in the crypto market as of right now. So cryptos are continuing to go up. Hopefully they do continue to go up. Bitcoin should be bouncing back to $30,000. We will see this. Let me know if you all think that we are at the floor. Was that dip the floor for this afternoon? Getting a lot of volatility coming in. Let the bookmap load. All right, so Bitcoin is pushing up to 29,800. This is looking very good, actually. So the bounce is happening. We are getting a nice bounce. Nothing crazy. We still have Ethereum needs to go to 2070 just to be where we just were before the live stream started, or around that time of the Powell speech, not this live stream. Bitcoin is attempting to push up to 29,800. If that does happen, we are looking at $30,000 Bitcoin, which is good for the market. We are seeing altcoins bounce up as well. Take a look at the US dollar. It is continuing to go down. This is good. NASDAQ is bouncing up. We have the S&P 500 bouncing up. We are at 406, almost at 407. So that's, if we can get to 407, Bitcoin, Ethereum, cryptos will follow. Come on, Bitcoin, push up to 20. Let's go to 30,000. Come on. There we have it. US dollars still continue to go down. We need the US dollar to come all the way back down to 103.3. Come back down here and break down. If that does happen, Bitcoin and Ethereum cryptos will bounce. It will bounce up good. So I was looking at the book map, which is a chart where we can take a look at all of the buy and sell orders for cryptocurrencies. If you want to get access to this, the link is in my video description. But basically, you see all these crazy levels. That's where all the liquidity is for cryptos, for Bitcoin right now. These are all the buy and sell orders on every major exchange. And you see them go up and down and change colors. So the darker the color, like red, for example, the more liquidity is in that range. And what these whales do is they put in and out of these orders to try to attract price up or down, try to scare people like, oh, we have 100 Bitcoins right here at this resistance level. So it does affect the market to a degree. But a lot of times, since that is liquidity, if the price gets pushed up into these levels really fast, it can cause short squeezes and a lot of really cool things that we can see live. So we are continuing to get a nice move here. Let's see if this does continue. That's what we want. DXY is still going down. We'll have a double chart so we can make sure that the DXY does continue to go down. The DXY is going to be on the right hand side, ladies and gentlemen. Seeing a decently strong downtrend. A little bit of a pullback in cryptos. Nothing crazy. Appreciate it, Alex. Now make sure you all smash up the like button, subscribe, and notifications on. And if you want to get access to buy and sell alerts for cryptocurrencies, market updates constantly, make sure you join the Patreon right now. It is only $10 a month. The minimum tier is $10 a month. There are other trades where you can copy all of my exact trades. That will be at tier 3 and above. Highly recommend it. Or we can even speak on the phone. And if you guys want to get access to the course right now, it is 66% off, where you can learn technical analysis. You can learn all this cool stuff here. Highly recommend getting it now before I raise the price a lot higher. Cheryl, thank you. Appreciate everybody coming to the live stream. It's great to have you all here. And watch our portfolios dump live. Watch your money go down live. That's why you guys watch this live stream. Watch your money go down. The DXY is continuing to go down. We just broke a low and we're going down. So you'll see Ethereum pop up right now. You'll see Ethereum pop up. In theory. There we go. There we go. Take a look at Shiba. Let's see what Shiba's doing. So Shiba is actually doing really well. You see a double bottom, a double bottom, otherwise a W formation. Generally, when you see a W, that is a bullish pattern. Whenever you see an M, that's a bearish pattern. I can show you an M pattern. They're all over the place. Like, look at this, another W, and look at W, and then a nice bounce up. I'm gonna show you an M pattern right up here. Should be an M pattern up here somewhere. Look at this. M pattern right here. Otherwise known as a double top. Oh, sorry, I have to move it over. Stupid things. So you see these M patterns. Whenever there's M patterns, you see significant drops. But Shiba Inu is bouncing up pretty hard. Not gonna lie. W pattern, beautiful. So Bitcoin, look at this. Just like I said, a little bounce up. I mean, if you just see the US dollar going down, it's gonna, Bitcoin and cryptos, they do the opposite of what the US dollar does. Ooh, look at this. The SPY 407.29. This is very good. This is the S&P 500. It's bouncing up. When the S&P bounces up, this is a very, very good sign for cryptos. Look at this. That's what we need. We need a strong bounce. We need this bounce to continue to go up. If that happens, cryptos will. They will go crazy. So the DXY right now, I'm going to show you guys something really cool. Look at how hard the DXY has come down. But look at this. Since Jerome Powell got off, the market is digesting the news, and they see that they're reacting in a good way. That's why the US dollar is going to come down. That's why it's heading down. But we need this thing to come under this green line. We might get a little bit of a bounce here for the DXY, but other than that, cryptos seem to have found somewhat of a floor for this afternoon, this evening. We'll have to see how the market pans out. I think there's going to be some more bullish action tonight. If not, if cryptos do end up coming back down and going under this green level, that's not going to be good. We will probably see a pullback tonight, but based on how the DXY is going down, the NASDAQ and everything's going up, cryptos should recover. Cryptos should follow suit tonight. We should see some more bullish action tonight. Cryptos should see some more green tonight and continue to go green for this evening today. So that's going to be it for today's live stream. Thank you all so much for staying, for coming to the stream. I am going to be doing a lot more live streams, especially during the day, so we can see what the markets are doing, where they're headed. And make sure you join the Patreon, subscribe with notifications on, check out that crypto course, smash up this like button if you would, please consider doing so. Thank you so much. That's going to be it for today's video, or today's live stream. There's going to be a video tonight. I'm going to be releasing probably 2 videos tonight, so make sure you get ready for those. Get ready. I'm going to make a video on Luna, and I'm also going to make a video on the whole crypto market. So get ready.